having a good Tuesday, trading well, having a profitable day, and yeah, hope that Bitcoin market is good to you, and that you're taking your profits early and often, and limiting your losses, and not being emotionally attached to your trades. If you had the distinct privilege of watching the Alpha Trading live stream that ended some minutes ago, you will note that during that live stream, we told you very clearly to take your profits on that little run that happened to the upside with the buy pressure after market open that lasted for a good half hour or so. And then it went up and hit that weekly level, which was a very good area to take profits, according to the VEPs, at which point mean reversion was extremely probable. And we said, take profits, take profits, take profits. Those who did, had a nice $2,000 move in their pocket, depending on their position size, obviously. $2,000 for every Bitcoin you have on the line, or whatever fraction of it for whatever fraction of a Bitcoin you had on the line. And the same goes for Solana, the same goes for Litecoin, the same goes for any number of crypto assets that were punching up when traditional markets opened. And it ran up. Bitcoin ran up a good 2.5K, depending on when you got your entry. And then what did it do? When I said it was going to mean revert on the 15-minute. And all those assets were going to mean revert on the 15-minute. And what just happened? They mean reverted to the 1110 RMLR and the 3012 RMLR. Why? Because that's what assets do, right? Assets are moved by the returns, the volatility, right? And after they distribute away from the mean, after the returns distribute away from the mean and hit their targets and the price action follows, what is the one thing that returns do after they're done distributing away from the mean? Right? Returns mean revert, and the price action follows. So $2,000, $2.5 grand, whatever that move was up on Bitcoin, whatever you managed to take of that, followed by $2,000 or $2.5 grand of the downside, whatever you managed to get of that. But if you just sat in the trade and watched it go up and didn't take your profits, you just got nothing. And maybe you're now in a losing position, which is, the question is then why? Why are you holding on to losing trades? Maureen, I don't know what you're saying there. I don't know. Hello to you. Shalom. Yeah, so it is crazy that people are taking leverage trades on exchanges that trade against you. Literally, they trade against you, and even the ones that don't, right? The A-book exchanges that in theory don't trade against you, well, they sell that information to whales and financial institutions who are trading against you with faster order flow information, right? Faster than what you see on your exchange. So what can you do to counter that? You can use the VEPs. What are the VEPs? VEPs is volatility, entropy, probabilities, and statistics. Those are the indicators we use in alpha trading. That's why it's possible, if you know what you're doing, to increase your probabilities of success consistently, to increase your probabilities of being a profitable trader consistently, right? If you think you can just run a trade and use lagging information like SMAs or EMAs or Fibonacci's or whatever, or you listen to some silly YouTube Jimmy tell you, oh, it's going to the moon now. Yeah, sure. After a whole bunch of bumps along the way. So you have to think about how conceited, how arrogant you have to be to just think you can open a trade and watch it run up like crazy, make a couple $1,000 move, and give you every indication that it's going to mean revert, and then just think, nah, it's just going to go sideways and up again. No, there's a very high probability that mean reversion is going to happen. And if it ran up a couple of grand like that very quickly, that mean reversion is going to come pretty hard and fast, right? Or yes, maybe it'll settle for a while, but then in that case, still, why don't you take your profits? Oh no, I want to hold on for a bigger P&L. Bro, what's this? You can take that profit, and you can get back in the next trade, right? You can get back in the next trade when it's good and ready, when you see the occurrences of opportunity lined up again, right? Now, if you miss that trade, no big deal. No skin off your back. You didn't lose a thing. It's better to not lose anything than to have taken that trade, held on to it for the whole way up, and then once it started going down, convince yourself, no, it's going to go back up again. And then you ended up getting a loss, or worse, getting wrecked because you had an insanely over leveraged position. It's better that you missed it, frankly, right? And then you look for the next occurrence of opportunity when it's actually likely to make a move in one direction or another, and get that move. And how do you know if it's going to make a move? Well, you don't always know when it's going to make a big move, but with leading information, you have a higher probability of knowing, and a measurable probability of knowing, what are the good targets, right? So you can watch it run up, and today was chef's kiss thing, mwah, chef's kiss. It was perfect, the move, the run up. If you look at the 1 minute, it was just going up, very little, every candle, 1 minute at a time, very nicely, making its way up, a good half hour, and then found its sell pressure at that weekly sell pressure line. And sure enough, right around there, found sell pressure. Gave you about 4 or 5 minutes even to get out of the trade with, a vast overwhelming majority of your profits, even all of them. But at least 3 minutes to get out with all your profits, pretty much. And about 5 minutes to get out with about 99% of your profits. And then it just started to walk right back down. So staircase up, staircase down. Perfect example of that. Hi again. Hey, what's up, Scullier? Good to see you, bro. It was a very demonstrable example of why we take profits early and often. It's why we don't just sit in trades for a long time. And why we certainly don't try to swing trade volatility, and definitely not with leverage. Try going to sleep with that. That's crazy, right? Imagine being even in a 2x trade or a 5x trade, right? And people are putting on 50x trades, 50x, 75x, 100x, and they are, and we see that as we look at tools like CoinGlass, where we see how many tens of thousands of traders are getting liquidated on moves like that. And it's very clear, right? When suddenly thousands of more people are liquidated in less than an hour, liquidated on longs when they shouldn't be, liquidated on shorts when they shouldn't be, but they're getting wrecked on a 0.5% move. That means they've taken 100x leverage, because if you're lucky, you're paying about 0.5%. In the case of those kind of traders, if they're lucky, they're paying about 0.5% to the exchange on the trade, and they're levered up to 100x. So a 0.5% move means they're getting wrecked. In fact, it could be even worse, right? It could be that at 100x, it's not even 0.5%, because some people are paying 2% fees on taker trades, right? Which is very high, but it's normal in the trading business. If you're getting the privilege of being a taker, you want your instant fill. You're not patient. You're not willing to wait a few seconds for your order to be filled. You're not willing to place your order somewhere different than the market price. well, then you're going to pay a higher fee. And those higher fees are going to eat your profits. And they're going to cause you to get liquidated much faster if you have an insane leverage position, which you should not do. It's just not a good idea, right? Yes, sure. If you put in, if you can afford it and you don't care, and you happen to put in whatever, a grand or two on that move, and it went up a few percent, and you happen to do some insane thing like put in 100x or whatever, and you took your profits at the top, then yeah, you made a few grand on the move, even more because it went up a couple grand. So it went up significantly, like 3%, right? A 3% move, even if you have just like a grand on the line times 100x, it's as if you're putting 100 grand on the line. So you would have made about, 3 grand or so on that move, even more. But if you didn't take your profits at the top and you watched it go back down, then by the time it got back down to where you started, you'd be at zero, plus the exchange fees. You'd be in the negative a couple percent. You'd lost a couple $100 if you're lucky if you got out there. And if it dipped 1% or even 0.5%, you'd be wrecked. So don't do that. Take your profits early. That's all I'm going to say about that. I'll talk to you guys later. Peace.